SIXY is coming, and it's all about those big six Canadian banks. Leverage, covered calls, twice a month payouts. Evolve may have just made banking look, well, SIXY. Fasten your seatbelts, folks. This is going to be a good one. This isn't just another income ETF. SIXY takes the backbone of Canada's economy, we're talking our big six banks, and turns them into a high yield engine. These are the banks that collectively have weathered recessions, housing downturns, global crises, and somehow they keep turning out record profits and reliable dividends. That resilience, well, it isn't luck. It's the product of a system built differently from the start. So back in the 1800s, when Canada was shaping its financial foundations, they didn't look south to the United States. In fact, they looked across the Atlantic to Scotland for a little bit of inspiration. The Scottish model of banking, basically, it emphasized branch banking over thousands of small local lenders like they have in the US. It was a system built on capital, strength, national reach, and shared risk, a design that proved both conservative and, at the same time, and this is the important part, remarkably durable. Canada borrowed that blueprint, and, well, quite honestly, we've never looked back. That's why instead of hundreds of regional banks, we have six big giants, all well capitalized, tightly regulated, and globally respected. It's a structure that's kept our financial system steady while others have stumbled. And it's the same foundation SIXY is now built on. Because Evolve isn't reinventing the wheel here, they're kind of taking what's already there and supercharging it. We're talking a touch of leverage, a layer of covered calls, and of course those distributions that are going to be paid twice a month. SIXY is aiming to turn Canadian banking stability into one of the market's most reliable income streams. SIXY stands for the Evolve Big Six Canadian Banks UltraYield Index ETF, and it does exactly what the name suggests. It gives investors exposure to Canada's big six banks, but of course, we got that twist that's designed to squeeze out more income, which is never a bad thing. The ETF itself is designed to hold an equal weighting of the big six, so we're going to get a fair representation of our favorite banks. So, of course, you guys know them: RBC, TD, BMO, Scotiabank, CIBC, and of course, National Bank. So instead of simply mirroring their returns one on one, SIXY, well, they're going to target up to a 1.33 times the performance of the selective equal weight Canada Bank Index. If they pull that off, oh boy, that could be pretty darn good. So that modest leverage, it means every dollar invested will be working just a little harder, giving investors slightly more exposure to the bank's movements, both up and, I gotta say it, also down. To turn that exposure into real cash flow, Evolve is going to layer on a covered call strategy, writing options on some of the bank holdings to collect option premiums. Those premiums become an extra source of income on top of the dividends the banks already pay. The trade off? You give up a bit of the upside in big rallies, but you gain steadier, enhanced yield when markets move sideways. One of the great things, though, about Evolve, and we will see that with this fund, is that in strong bull markets, they will tend to write covered calls on a smaller proportion of that portfolio. So that way there, it kind of helps with that capping of the upside potential. It's still there, but it's not as bad as it could be. Add it all together, and you get an ETF designed for one clear purpose: steady, amplified income from the most stable sector in Canada. And, well, for investors who love frequent payouts, Evolve plans to distribute cash twice per month, making SIXY one of the few Canadian ETFs with near bi-weekly income potential. I like that. A sub to the channel is the best way to keep your portfolio looking SIXY with future content. If there's one thing Canada knows how to do right, it's banking. Our big six aren't just big, they're battle tested. They've been through recessions, housing bubbles, energy shocks, and global financial meltdowns, and somehow they keep coming out stronger. And as we mentioned before, the secret is how they're built. Each of the big six operates under a tightly regulated, nationally integrated system, which means they can weather storms that would sink smaller regional banks elsewhere. They hold some of the highest Tier 1 capital ratios in the world, maintain conservative lending standards, and carry dividend records that stretch back more than a century. Ah, boy, that's fantastic. And just to put this into perspective, when the 2008 financial crisis hit, hundreds of US banks failed. Like, that's a lot. In Canada, guess what? Not a single one collapsed. Instead, our banks quietly raised capital, kept lending, and even expanded internationally while others were downsizing. That's not just resilience, that's discipline baked right into the DNA of the whole system. Today, these institutions don't just dominate the Canadian landscape, they play on a global stage. RBC and TD, they're major players right across all of North America. Scotiabank, of course, stretches pretty deep into Latin America, and BMO, CIBC, and National Bank. They definitely continue to expand through wealth management, capital markets, and of course, digital banking. Together, they make up nearly one third of the TSX by market weight, and they kind of serve as the heartbeat of Canada's economy. So when Evolve builds an ETF that leans on the big six, it isn't just chasing yield, it's anchoring that yield to some of the most reliable, profitable institutions on the planet. These are the same banks that keep paying dividends through thick and thin, and now SIXY takes that consistency and enhances it with a little extra juice. You may be thinking, wait, didn't Evolve already do this with Bank? SIXY does sound familiar because, yes, Evolve already runs another ETF focused on the same sector. Bank, the Evolve Canadian Banks and Lifeco's Enhanced Yield Index Fund. Right there in the title, you can see that Bank is a little broader in scope, as they include some of Canada's big life insurance companies in the mix. SIXY, on the other hand, strips out the Lifecos entirely and goes all in on the banks. Think of it as Bank's more focused, higher octane sibling. Same foundation, but with a sharper yield engine under the hood and more frequent distributions. SIXY slots neatly into the growing trend of enhanced income ETFs, but what makes it stand out is its focus and familiarity. It's built entirely around six companies most Canadians already know, trust, and more than likely bank with. Yes, it's engineered to produce a yield far beyond what a traditional bank stock portfolio could deliver on its own. And just in case I know you're going to ask, we do not yet know what the yield on this one is going to look like, but I am expecting it to be nice. I definitely think it's going to be nice. For income-focused investors, SIXY could serve as a core holding, a place to park cash and collect regular bi-weekly payouts without having to chase riskier assets. The modest leverage helps boost returns when markets cooperate, while the covered calls help cushion the ride when they don't. For balanced investors, SIXY could complement existing covered call ETFs like HDIV or HYLD, offering a domestic anchor that's rooted in stability rather than volatility. And for anyone who already holds Evolve's Bank ETF, SIXY adds a more concentrated, yield-driven way to double down on the same sector. The key is understanding what SIXY is not. It's not a speculative fund or a fast money play. It's a steady, disciplined way to harvest income from Canada's most reliable profit machines, fine-tuned with modern tools for today's yield-hungry market. In short, if you believe Canada's banks will keep doing what they've done for over a century, make money, pay dividends, and outlast downturns, then SIXY could be one of the most compelling new income additions for 2026. A quick final note. We do not yet, at the time of recording, have a release date for SIXY, but I am expecting it sooner than later for sure. If you are interested in SIXY, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on long point ETFs. Thank you for watching, and I will see you in the next video.